S&P 3000, Dow 27,000. Last week the market continued to make record highs. In this week's video, we're going to cover the leading index for 2019, as well as covering the major news stories that moved the markets last week.
As Matt mentioned at the beginning, the U.S. markets continued their push past all-time highs last week, as the S&P 500 and the Nasdaq were up almost 1%, and the Dow Jones led the way up about 1.5%. And the S&P 500 and the Nasdaq are up over 20% for the year still. The Russell 2000 was negative last week, as it's lagged the other U.S. markets all year, as small and mid-cap companies continue to lag the large caps and technology. Foreign and emerging markets were also negative last week, with foreign markets down about 0.5%, while emerging markets were down 0.75%, but still foreign and emerging markets up over 10% year to date. Today we want to look at a chart of the Nasdaq. The Nasdaq consists of technology companies, and technology so far in 2019 has been the leader. Now, a few weeks back, the Nasdaq broke out above the 7,800 level and made all-time highs. And the Nasdaq was actually the first US index this year to break out and make that all-time high. Now, the Nasdaq since then has continued higher and is now pushing about 7,950. And 8,000 is a level here on the Nasdaq. It's a mental number for investors that they'd like to see crossed. And this is similar to the S&P 500 that just broke 3,000, as well as the Dow Jones that broke over 23,000. Now, the resistance level here, the top blue line on the chart, around 7,800, is now an important level of support that we don't want to see the Nasdaq fall back down below. Because if we do, we could potentially see a move back to the bottom blue line on the chart here on the Nasdaq, and that's right around 7,000. And that's about an 11% move to the downside.
Last week's biggest news story was the Federal Reserve's Chairman Jerome Powell's testimony on the state of the economy, inflation, Federal Reserve's balance sheet, and interest rates. Now, a direct quote from his testimony was, "The uncertainties around trade tensions and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook." Now, many feel that this quote directly paves the way for a July rate cut. And as soon as the testimony was released to the public, the markets rallied and made all-time highs. The next news story from last week has to do with trade tensions. And most of you are probably thinking, well, what happened with China now? And actually, President Trump has targeted a new country in regards to trade wars, and that's India. And he was directly quoted as saying, "India tariffs on American products are no longer acceptable." So as the trade war with India moves to the forefront, trade tensions with China seem to be diminishing. And it's important to note that China just released their second quarter year-over-year GDP growth numbers. And they came in at 6.2%. Now, this is the slowest growth that we've seen from China since 1992. So it's going to be interesting to see how China responds to these low numbers. Will they expand their local stimulus program, or will they finally put a priority on finalizing the trade deal with the United States? Something to keep your eye on this week is the Fed Chair Jerome Powell will speak in Paris, and this is the last time that we'll hear him talk before the interest rate decision in July.
Also, this is the first week of earnings season, where about 10% of the S&P 500 reports their earnings, including a lot of the major U.S. banks, and J.B. Hunt, which is a major trucking and transportation company, which could give us a pretty clear idea of the status of the U.S. economy.
Thanks for watching, and if you're on Facebook, please like and share our video. And if you're watching on YouTube, please like and subscribe to our channel.